Welcome to the September Galileo Capital Update. I'm thrilled to be joined by Jenna. Jenna, thanks so much for braving the camera to join us. I know you love public speaking.
Thanks, Warren. It's good to be back.
So I think there's an incredible amount that's happening all around the world at the moment, and I guess lots to talk about. But maybe to kick it off and put you in the hot seat.
Yeah, Warren. So it's been an incredibly volatile and difficult 6 months. If you can please just give us a bit of an update on what's been happening in the markets, both globally and locally, over the last month.
So I think it's it's always dangerous in a early stage of potentially a stock market recovery to call this as the stock market recovery. What looks like's happened so far is that global markets hit a low in the middle of June, somewhere around the 15th to the 17th of June, and since then they've started to recover quite a lot of their losses, especially the big tech companies. And the question now is whether that recovery from those lows in June is the bottom. Was that the bottom? And are markets starting to climb out of the hole that they dug for themselves, from October last year, or is this just a temporary recovery before it carries on going down again? And people who know us well will know that we don't do predictions. So I'm certainly not going to be dumb enough to try and give a prediction now. But I do think that what we're looking for is inflation in the US. We need to understand that story. So it might be that inflation peaked at 9% and came down in the following month to 8.5%. And if that keeps declining, in other words, it goes from 8.5 to 8 and then 7.5, etc., then that might signal that we've gone through the worst of the stock market crisis overseas, and certainly that would have a very positive impact on South Africa. So I think long story short, we had what's turned out to be the worst stock market start to a year in 40 years globally. And that's the first 6 months of the year, but certainly July and August was significantly better, and a lot of that is driven. I would say most of the story now is about inflation, and therefore what the American Federal Reserve is going to do with interest rates. It's very likely that interest rates will still rise a bit more in the rest of this year and maybe at the start of next year. But what the market's trying to understand is how much more and for how long will interest rates go up. And once they see that inflation has turned the corner and is starting to come down, that's really the signal to make investors a little bit more positive than they've been so far. I think the humanitarian crisis of the Ukraine is still with us. The war is now, a bit more than 6 months old, and it is a humanitarian crisis. But what's interesting is it's actually kind of moving to the background in terms of focus of investors, and so not to diminish the human impact, but certainly investors are much more focused on inflation in the US. So I think those are probably the big mega trends that we need to be aware of, and all of those mega trends have an impact on South Africa. In the meantime, we recently had an update on the unemployment numbers in South Africa. They are still horrific, but what's interesting is that they're slightly less horrific than anticipated. And if that's a trend that continues, where we start to see unemployment reducing, consistently, that's a very nice sign. Unfortunately, we've also seen inflation staying stubbornly high in South Africa. The last number out was 0.1% more than anticipated. So where most people were expecting about 7.7, if I remember correctly, it came out at 7.8%. So it's a high number and certainly worrying for a lot of investors. But again, if inflation turns the corner globally, that will be sparked by lowering food prices, lowering oil prices, etc., and that's very positive news for South African inflation rates as well. So I think it's dangerous to say we're optimistic. We're not. We just think that a lot of the bad news is in the prices of investments all around the world right now, and that investors might be starting to price in slightly less bad news, if that's a phrase, and hopefully over time that we see that that trend continuing, and that should spark a decent period both for South Africa and global markets. So I think, Jen, yeah, I don't want to go on too much. As you know, I love talking about this stuff, so we can talk about this for an hour and a half. But I think also, it's always important to relate stock market volatility and how we think about investments to our clients, and actually to kind of the human beings behind the money and the like. And in that regard, I know you found some fairly recent research about how investors, especially retired investors, deal with their money in retirement, and some sort of what might sound like strange behaviors around money. But I thought perhaps to kick off with that.
Thanks, Warren. Yeah, so it's like you said, it's more the life planning part of this. And a lot of our clients are actually worried that they're not saving for enough for retirement. But on the flip side of that, we have quite a few clients that have sufficient assets during retirement and then end up with quite a large base when they do pass. So the theory on this is there's a nice, it's actually a book, and the guy talks about it. It's called Base Start with Zero. And in an ideal world, you spend your last rand on the day you die, assuming that you would have already given all your money to heirs previously in time. And a study was done where people would actually prefer to get money sooner, even if it is less money, sooner in time rather than waiting, until they're 60, 70 years old and then only getting the inheritance. So I don't know if you want to maybe just elaborate a bit more on that for our clients that are in that position.
Yeah, I think it's one of those financial planning conundrums that we've always grappled with as a financial planning business. Is we are a wealth business, and then by definition, we most of our clients are families with sufficient assets, and we have a fair number of our clients who actually always will have enough money, and any calculation that we've done for them will show them that they have sufficient assets to fund their lifetime, and potentially 2 or 3 lifetimes. And the problem in that scenario is, it sounds in like a wonderful problem to have, but what we realize is that a lot of our clients might live a fairly compromised retirement because they're so worried about their finances and about having enough that they don't they don't travel, they don't give money to charities, for example, or they don't give assistance to their adult children earlier in life, for example, to help them buy a house or fund education for our clients' grandchildren, etc. Because they've got this scarcity mentality, they're just really desperately afraid of running out, and it's a habit of a lifetime. It's an ingrained, hardwired response. So we're not saying to people in that position that you should change your core being, but what we are saying is that if you think that you're in that position where you've got sufficient assets, it's worth having a conversation with your adult children, and I mean, children, let's say over the age of 25, and those that are financially responsible, to ask them this question, and find out what they would like to do with the assets. Because most of the time, when we talk to the adult children of our clients, they value getting some lump sums, and I'm not talking about their entire inheritance up front. We're talking about smaller lump sums, but earlier in life, because it gives them the ability to make slightly different long-term financial decisions, which have a massive impact on improving the quality of their lives. And I guess the message to our clients is, if you're sitting in this position, just know that giving some of your capital to your adult children who are financially responsible, it can be a hugely rewarding thing to do, both financially for your adult children, but also emotionally for you to see that the capital that you've built up over your lifetime is being deployed and used correctly, and while you're alive, you have some say about where that money goes, how often you allocate it to your children, and potentially also that you see it impacting your grandchildren. That you get to see them going to the right schools, if that's what you feel like, and obviously if they're adults, if they're male, let's make sure they all go to Rondebosch, please. That'll be good for your grandchildren. So it's just important that it's a conversation to have with your adult children if you're in this position. So I think again, it's a human conundrum that a lot of us face. It's not a pure financial calculation, and we're absolutely aware. We're certainly not saying that you should try and aim to spend your last rand on the day you die, but maybe that you don't have as big an estate as you initially fear, and do something a little bit more constructive that might be good for you and good for your family.
And I think the clients can also chat to us, Warren, just in terms of tax planning. Speak to your tax advisor on that. It's important to remember you've got your 100,000 rand donations tax that you can give to your adult kids each year, where you won't be liable for tax on that. So and just various ways that you can do that. So I think if clients are interested in it, we are here to chat to them about it.
Great. Yeah, I think that's a fair point. I always forget about the 100,000.
And then, Warren, recently Frans Cronje did quite an interesting article and interview on his view on South Africa and what he thinks is going to unfold in the next couple of years. Can you elaborate more on this interview and just what your views are for South Africa?
Yeah, I think we, politics is such a kind of core in South African investors' minds. We can't escape politics, and unfortunately, the news flow that we get from the media is generally very good at highlighting what's going wrong, and also highlighting anything that's potentially scary. But our media are very poor at highlighting anything that's positive and giving context to the news. So for those that aren't familiar with him, Frans Cronje, is a kind of a very good researcher on the South African voter. He does enormous, very in-depth polls of how South African voters think, what are they worried about, why are they voting in particular ways, and then he takes that information and does some scenario planning around what are the potential outcomes from based on the information that he's gathered. He's been doing it a long time, and certainly it's someone that I didn't really enjoy following for the last decade because he's been relentlessly pessimistic, and I think that's my word, not his. He doesn't attach emotion to his outcomes. He tells you that it's data driven, but his outcomes that he's been looking at have been really negative for South Africa. And what's interesting about them is that he started putting out very negative outcomes when South Africa was economically doing incredibly well. In the peak Mbeki era, when unemployment was reducing, the economy was growing, things were looking really good. He started to say that his research is and his polling is showing us that South Africa is going to have a very dark decade at least. And unfortunately, he was right. And the interesting thing now is about 4 days after the riots and looting broke out in July last year, he came out to say that his polling is showing that South Africa's trajectory has changed, that the nature of our politics in South Africa have turned a corner, and that we are in for an era of coalition politics at a national level. And I think that's the important point, is we've seen coalition politics happening at municipal level in South Africa, not necessarily with good results. But he's saying that if you look at the kind of political models that we should be looking at for the future of South Africa, it's most likely going to look like the German model or the Israeli model, where you get more small parties forming coalitions and running the country based on service delivery rather than on ideology. And I think it's a worthwhile video to watch. Unfortunately, it's with Alec Hogg, who I don't always think gives airtime to the best guests, but in this instance, it is one that I think is worth watching, and we'll certainly provide that to you as our clients, so that you can see that video. But I think he's sketching a fairly positive scenario for South Africa over the next decade. And importantly there, I'm not saying that because he was right last time that he necessarily is going to be absolutely right this time. I think it's an important context to what's going on, and understanding that the South African voter, who for a lot of us has been very frustrating with their perceived loyalty to the ANC, that potentially there's some logic to what's happened in the past, and certainly that loyalty is now gone, and he calls it a divorce. That the bulk of ANC voters emotionally have divorced the ANC already, and that we will see that divorce in an accelerated decline in support for the ANC at national elections. So I think that is important, but how we do coalitions is equally important, and hopefully our coalition politics becomes more mature, and he certainly is predicting that we see new good political parties coming to the fore, but not 30 or 40% political parties. There might be 5, 10, 15% parties, but you don't need many of those to form a majority government, and if they do it correctly and maturely, that could lead to very positive outcomes for South Africa. So I think, just for me, it's an interesting context. It's something that's not freely available to everyone in the mainstream media. I think Frans Cronje is worth listening to, not for a second saying that he's always going to be right. He is a forecaster, and we are wary of forecasts, but I always like the context to how he comes to his forecasts. So so I think that for me was a valuable, interesting piece. It does correlate somewhat with what JP Landman's been saying for the last few years, that South Africa's trajectory has changed, and that we are kind of digging ourselves out of a very deep hole. And I think that's maybe the point here. Our economy is not going well. Things are not good in all aspects of our socio-political economic life. But potentially they're not as 100% awful as the news makes it out to be. And I think that's really the core message that I would like to give. Some things are going right. The deregulation of Eskom for me still is going to have a massive impact on getting the economy going again. And potentially, if we see something similar happening in Transnet, which is what we're supposed to be seeing, I think that's very positive. And then the number of arrests of crooked people is accelerating under the Hawks, and hopefully the number of convictions similarly should start to climb as well. So there are some pieces of good news. It's important to have those as a context to the other bad news that we all know so well. I think that's about it from me, Jen. I can't think of something else to add to that.
No, great. Thanks very much for the update, Warren.
And thank you to Jenna for braving the call, and to you as our clients. We hope that the worst of the current sort of inflation scare is behind us. We're not predicting just yet that's happened. We will keep watching those inflation numbers. If they keep getting less bad, that is very good news. And don't worry too much about the noisy political kind of scene in South Africa for now. It's likely to be very loud, very noisy within the ANC until after December, which is the end of their elective conference. So don't focus on kind of political interviews for now as gospel, because there are lots of people out there trying to get attention. I think it's more important for us right now to focus on that inflation number in America and what the Federal Reserve is going to do. That's a material thing to focus on. For the rest, it could just be a lot of noise for now. Thanks so much for watching, and we'll keep you posted in the October update.